Welcome back. Well, Cummins is the next corporate on our radar. Remember, the company has seen a bit of contraction in terms of the gross margins, but we will need to understand how are things moving, both on the global business aspect as well as on ground. To understand that and more, we're joined by Mr. Ajay Patil, the Chief Financial Officer at Cummins India. Hi, Mr. Patil. Thanks so much for joining in. Well, I wanted to focus on the European piece first. There's a gas supply issue in Eastern Europe and various other places out there. And the sense you get is maybe Genset's demand is on the rise. Are you experiencing anything in that vicinity? If you could tell us how things looking out there. I think Europe as a percentage of your exports is roughly around 20%. Give us a sense on that.
Hi, good morning to you as well as all the viewers, and thank you for having me on the call. Yeah, what we have been saying about our exports is primarily that the exports we make is to all the continents of the world. And Europe, of course, continues to be one of the geography. You did talk about our European sale at a certain percentage. We typically don't give regional numbers with respect to exports. But what I can certainly say is that sequentially what we have been observing is that the exports demand for us has been fairly steady. And that is what we have been observing over the last 2 to 3 quarters. And a lot of it is attributed, broadly speaking, for exports, not specific to Europe, is really the pickup in economic activities across the end markets. Largely what we see is driven by a combination of robust growth in markets like data centers, telecom, as well as to some extent infra. And to an extent, we also see, based on the profile of our exports product, that the private capex in those respective economies is also started to pick up.
Mr. Patil, we get that. Sounding that things are on the mend out there. On a quarterly basis, you can't break up the export number for us geographically, but 500 crores per quarter, that's doable. I think you indicated that last time as well.
What we have been saying is that our endeavor is that we continue to sort of look at exports as an important component of our revenue profile. And I know the analyst and investor community has been, few quarters ago, I remember they asking us when we will do 400 crore a quarter, which we have been doing over the last 2 to 3 quarters consistently. I think the key for us is really to keep sustain the run rate that we have on the exports and find ways to sort of grow it.
Okay, let me switch that question the other way, right? I mean, in FY22, you had about 1,600 crores of revenues in exports. That was a growth of almost 40% compared to FY21. Will you do the same growth rate or better?
Well, I mean, as you would imagine, I mean, our efforts are on to see that we continue to find ways to keep growing year after year. Guidance is harder in today's times simply because we still continue to see some disruptions when it comes to supply chain, primarily the electronic parts. Also, from an end market perspective, while there are good indications that the demand sustenance may be there, hard for us at this point of time to provide a number and give a guidance because we have gone public and said that we are not in a position to give guidance, primarily because of the uncertainty that we see on the supply chain side.
All right. Mr. Patil, at one point of time, the street was hoping that you all merge the unlisted entity, that is CTIL, with the listed entity. Now, suddenly there are 3 Cummins entities, the listed entity and 2 unlisted as well. Could you tell us, is there any plan of bringing them together, merging all these 3 entities, or do you believe if you're enjoying any kind of synergy benefits, if at all, you'll choose to keep these entities separate itself, a couple of unlisted entities and 1 listed entity?
Yeah, I mean, our model of how we are operating in country is fairly consistent. I think the listed entity is around for a long time. Incidentally, we completed our 6 years in India. And the 2 unlisted entities that we are talking about are into products which are historically are not part of the portfolio of products which were there in the listed entity. And therefore, what we see is that the listed entity and its growth and access for technology for the listed entity, that continues to remain for that listed entity portfolio to continue to grow. And therefore, to that extent, purely from a governance point of view, we maintain a very tight governance between listed and unlisted entities. That's number 1. And number 2, you asked a question with respect to how are we thinking about any potential merger of these entities. I think that is a question which we get asked very often. And what we continue to say is that that's primarily a shareholders' question. And if the shareholders make those decisions, we'll of course be the first to come and inform you about it.
But is there a plan?
I can't comment on that, unfortunately. I'm sorry about that.
No, that's fine. Okay. Let's talk a little bit about the domestic business, because you said in the exports there is some supply challenges that you're facing, because of which you can't give us a number. In the domestic power gen space, what are you looking at in terms of growth? And do you have supply issues there as well, which is restricting your growth?
Certainly, I mean, there are, some supply chain disruptions which are still there. We have been saying this even in our previous conversations, that today we are not able to meet 100% of the demand. Broadly speaking, anything between 10 to 20% of our revenue does get impacted on a quarterly basis. It is not a loss of business, just to clarify. It is just a deferment of revenue simply because of the delays on supply chain side. That's number one. Number two, purely from a demand point of view, what we continue to see is that the end markets, especially when you look at larger end markets for us, be it data center, be it infrastructure, hospitality, rentals, commercial real estate, we continue to see a fairly steady demand. We also see that the pickup from these end markets with respect to the project's completion, that is gathering pace as well. So that gives us a lot of optimism with respect to how we look at the domestic demand. And obviously, as we look into the outer quarters, there is a key milestone coming up in terms of the CPCB 4+ norms, which currently are anticipated to be effective July 1st of 2023. So this is going to be a step change from an industry point of view. And we are ready in terms of meeting those very stringent emission standards, which are prescribed under the new norms.
Okay, all right, Mr. Patil, final question before we let you go. When exports increase, normally you see that the margins start improving. Your gross margins have come in at the lowest level you've seen in the last 5 years or so. So my question to you is, are margins now going to improve from year on, given that things are sorting out? Point number one. And the second factor, please clarify to our viewers, we keep hearing about this buzz about delisting. Any such plan or no plan whatsoever?
I can't comment on the delisting part. I think on the margin side, as all of us know, the effect of commodity inflation that we have seen and the pricing action we have taken, we are looking at ways in which the gap between the two closes, and a lag effect of pricing is what we think will come through in the coming quarters.
Mr. Patil, we'll leave it there today. Thanks a lot for joining us. Let's get back to tracking the market. What clearly stands out is that the bank Nifty's got more momentum once again. 40,558. The Nifty perhaps is still trying to sort of get into that breakout zone. The bank Nifty has already done that. So a lot of individual banks doing well. By the way, the top gainer on the Nifty now is Adani Ports. Just pull out that stock intraday. That is now up 3%. So looking quite good over there. IndusInd Bank and Shree Cement also doing well from the index. Let's get into our charting trend segment, where we look at market through a technical lens. Rahul Sharma is head of technicals and derivative research at JM Financial Services. He is now joining us. Rahul, hi, good morning. I have to start with Bank Nifty because that's the one where we're beginning to see big moves. Your thoughts on whether new all-time highs are coming here, and when?
Yeah, good morning, Anuj. It's a competition between the two indices. I think that is Bank Nifty clearly leading the show. If we see the constituents, some of these names, especially the heavyweights, are at big cusp of big breakouts. So I believe that Bank Nifty should be the first one to head towards the 41,800 mark, which was the previous all-time high, and Nifty should not be far behind. Now, the rationale is simple that around 50% of the Nifty constituents, which is BFSI plus auto plus consumption, is already quite super bullish. So these indices have already broken out. The remaining 30% of Nifty constituents is moderately bullish, which constitutes remaining sectors like telecom, oil and gas, consumer durables, power, and pharma and IT is something which is languishing in the Nifty pack. So we believe that this is a place where this is actually a start of a new mega bull run, where we are targeting 21,000 of the Nifty in possibly the next 6 months or so. And we should see relative outperformance continue from these sectors. Now, IT is one sector which has been a laggard, which if this turns around now, that could also add impetus to the overall scheme of things. And we should see, markets firing from all guns. So as far as the short-term view is concerned, I think 18,600, the previous all-time on the Nifty, should be done in a month or so. as far as our 21,000 target is concerned, we're optimistic that this should happen in the next 6 to 8 months, conservatively 12 months, but I think 6 to 8 months is a good amount of time for that target to be done.
Okay, so 21,000 on the Nifty. Here it comes in the next 6 to 8 months. That's what Rahul Sharma is indicating. Rahul, good morning. So you said that banks, are going to lead it from the front, and IT has taken a back seat, at least for now. Any other sectoral trends that you're looking at? Who could be the leaders that will take the markets to these levels?
Yeah, so two sectors clearly come to my mind when we talk of which would be the alpha generating areas of the market. One is clearly the consumption theme. Consumption as a sector is expected to do very well. The festive season has been fantastic. It has in fact started off fantastically well, and with overall good monsoons, we think this sector should only do well. The sectoral index, which is the India Consumption Index, is already showing signs of leadership. So we believe that this is one area where more money can be made. But the biggest money, I think, will be created in the small cap basket. If you see the small cap 100 index, it has just crossed its 200-day exponential moving average, and there is a lot of headroom there in mid caps, in small caps specifically. So in the last few weeks, mid caps and small caps have come out of their consolidation zones, and the risk appetite is coming back in the retail and intra HNI segment of the market. So we believe that the biggest alpha will be created in small cap area. Quality stocks, in the small cap 100 index can be considered. In fact, a basket of stocks is something that we recommend to our clients to invest in, especially given the overall resilience of the market. So, we have an internal strength, and second is the relative strength that we have as compared to the broader markets. Last 2 weeks, we have been defying gravity as far as US markets are concerned. Now that they have turned, in fact, the last time US markets turned around in June, we saw a 1,100-point rally in the next 1 month in Nifty. Something similar can happen over here where Nifty can take out the previous all-time high in the next 1 month. And we believe that consumption and small caps are the two areas where significant upside can be expected in the medium term.
Right. Hi, Rahul. Let's focus on a couple of names then, stock-specific names. The move that's been baffling from the cement space has been Ambuja Cements. That's been an outperformer from that space. So where is that stock headed? And from the banking space, which is sounding rather bullish on, Kotak Mahindra Bank has been a relative underperformer. You believe it's time for this one to fire? What are the targets on both these two?
Yeah, so Ambuja is one of our top picks. In fact, we have recommended to our clients around 410 levels. We believe that this is just the start of the overall, bull run that this stock has entered into. This is one of those phases where the stock enters into a blue sky territory. In fact, there are fundamental reasons to it, given the increasing synergies between the Adani group of companies and the savings that they will do in Holcim loyalty. I think the margins are set to rise and the stock is set for re-rating. Technically, whenever stocks get into such blue sky territories, the best thing to do is buy them and keep on riding them with trailing stop losses. As an immediate target, we're expecting 500 rupees to be tested anytime soon. But positionally, we are optimistic of a target of 600 in the next 3 to 4 months for Ambuja Cements. If somebody is looking to buy fresh, the best thing to do is buy it with a stop loss of 420, and still there is a decent upside that can be expected in this stock. As far as Kotak Bank is concerned, now Kotak Bank has been attracting a lot of open interest in the last few weeks around the 1900-1950 zone. In fact, this is one of the only private banks which has not participated equally as far as some of the other private banks have done. And I believe there is a very strong case for short covering here, a very strong case for a catch-up rally over here. And as far as levels are concerned, I think 1950 and above, this stock should head into a strong momentum zone. And above 1975 is where positions can be added. Overall, we are optimistic that 2130 to 2200 is where the targets are expected for Kotak Mahindra Bank. It can be bought with a stop loss placed at 1850. So, banks are here to, the rally in the banks is here to stay. It's all Rahul, about, cherry picking. And
got that. Rahul, what about Infosys and ITC, two other stocks that I wanted your view on?
Yeah, Anuj. So in IT, the good thing about the IT index is it has honored the previous week's lows. In fact, the last week's lows have not been broken. A lot of negativity is already priced in into the prices, into the current levels. And as far as Infosys is concerned, I think as far as this week is concerned, it is closing on a very strong note. And as a level is concerned, I think 1600 is somewhere where we see this bounce back coming into. So we are optimistic that IT should see a bounce back from here. Although out and out rally is something that we need to wait for further data to confirm. But as of now, I think with maybe a 1450 stop loss, we can add longs over here for a positional target of 1600 on the upside.
Okay, we will leave it at that. Rahul, thanks a lot for joining in and giving us an update. That's 21,000, the target that he's looking at on the Nifty in the next 6 to 8 months. Well, that's some optimistic views coming in. But we're not done with tracking technicals just yet. Mitesh Thakur will join in for some technical trades and tell you how to profit from the market today. Stay tuned for that.
Welcome back. Well, no stopping the market, honestly. I mean, just not even intraday dips is what you're getting. 17,900 is still holding firm on the Nifty, 40,584 on the Bank Nifty. Mitesh Thakur is back with us. Mitesh, it's just like a parabola, right? You just don't get an entry. But tell us, what next for index and what would be your 10 a.m. calls?
I think the index, it still looks strong while we've slightly tapered off on the day's high. As I said, I think the key here would be the Bank Nifty, and Bank Nifty hasn't, started weakening as yet. So I think the overall bias should be on the upside, and financials enjoy a good weightage in the Nifty itself. So stay positive. Look for targets of 17,965, 18,000 to begin with on the spot, and then we might look at 18,150 as well. On the stock side, UPL is something which is reversing from oversold levels. That's a buy. Keep a stop at about 744 here and look for targets of 775. And the other one is again a banking name. IndusInd Bank has given a good gap breakout. It's moved up slightly in the last few minutes, but around 1140. Try to buy with a stop below 1125 for targets of 1180.
Okay, thanks a lot for that. So that is on the banking space. Let's shift focus now to the commodity markets. Manisha is with us. Manisha, what's the one commodity that you're tracking today?
Sonia, I'm looking at rice because the Indian government has taken the latest measures into this one. We've seen various commodity, agriculture especially, where Indian government has taken measures. There have been stock limits, export prohibitions, restrictions so as well. And now the latest clearly has been rice. And we've been talking about it for some time that it was perhaps coming because you have seen the Kharif sowing slightly on the weaker side. So what we have in hand is India imposing 20% duty on exports of some grades here. India, remember, accounts for 40% of global shipments, and India exports various varieties of rice to nearly 150 countries there. What we have in hand, when you look at the notification, is that there is no duty on parboiled and basmati rice. There is 20% duty that you have on white and brown rice. This actually is a category that sees 60% of its share in sense of exports of rice from India. And then there is a complete export ban on broken rice. This is what goes to Africa and various other countries as well. And for feed too, this is the rice that is used. When you look at the numbers then, we have seen the various reasons for this step to be taken. One, there is below average rain in various producing states like West Bengal, UP, Bihar, etc. And when you look at the overall Kharif sowing for paddy, that is down by nearly 6%. And while it might match as compared to last year, but this is going to be a delayed harvest when you look at rice or paddy there. And not just India, when you look at the international markets, the European Union rice output is the lowest since 1995. Italy and Spain countries are looking at drought situations. The US rice crop also is seen lower on year-on-year basis. When you look at the overall numbers in the global markets in sense of trade as well, we did see exports at around 54.3 million tons globally. Within that, as I said, 40% is India's share, so that comes to 21.5 million tons. On an year-on-year basis as well, the Indian rice exports have continued to rise. 8.8 billion last year. This year has been 9.6 billion. And in value terms as well, the rice exports have been on the higher side. This actually has been, the last year has been the best year when you look at Indian export numbers and the value-wise as well. This is a breakdown on what we do in sense of rice exports. Basmati is just about 4 million tons and non-basmati is 17 million tons. And that's exactly where we will be taking a hit as a country. And much of this business clearly will go to various other countries like Vietnam, Thailand. These are the countries that also do rice in a major way. The prices has been the major concern here. The global prices up by 20% so far in this year. The Indian rice price rise clearly has come in last 3 or 4 months, where we have seen 30% of a price increase in last 3 months. So while it will impact the rice exporters and the long-standing contracts with various countries, but clearly being done to ensure that availability and affordability of rice in the country stays strong.
Okay, Manisha, thanks a lot for that. Well, the market is really soaring now, so don't lose sight of that. 105 points higher for the Nifty, and lots of stocks sitting at fresh highs, even in the broader market. So from the frontliners, of course, Ambuja, SBI, Oberoi Realty, ICICI Bank, ITC, Thermax, all at fresh highs at the moment. But let's take a bit of a breather from tracking the markets and get you some important corporate opinion. Shireen Bhan caught up with Noel Quinn, who's the Group Chief Executive of HSBC. He says that growth in India has been consistent, and he sees huge potential for India to be a big global supplier as geopolitical concerns for reorganizing the global supply chain. Listen in.
I'm really pleased with the growth we've seen, and the great thing is it's been consistent for the last 10 years. And that was one of our ambitions, not start, stop into India, out of India, but consistent growth, consistent investment, and be a sort of a reputable player that people can rely on. We're dependable, and we're there for the long term for India. And that's my plan going forward. Continued investment is definitely coming across all business lines: commercial banking, retail and wealth, and our global banking and markets business. But we'll be there for the long term. It's not just one spurt of investment and then walk away. It's consistent long-term investment.
Possible M&A here in India as well in some of those areas that you spoke of, and I know that you want to focus much more on the wealth management side, on the asset management side. Would those be areas of opportunity from an M&A perspective?
Well, I'm pleased to say we've already done our first deal with the announced acquisition of the asset management business from L&T. We're hoping to get approval on that very shortly, and that's a good platform for future growth in asset management. And I'm willing to consider further acquisitions should they become available in the future. You will also be aware that we're already in a joint venture on the insurance business. We've announced that we are in discussions to try and increase our share of the joint venture to 49%, and we'll see how those discussions go. But that's, I think, a measure of our appetite to continue to invest in India.
You know, you talked about the changes that we are seeing in supply chains, and you believe that this is not deglobalization, but it's reglobalization, and that's what I want to pick up on. How much of this reglobalization is going to benefit India? What we are starting to see is, people are looking at nearshoring, so moving manufacturing facilities closer to the home market. We're also seeing this China plus one strategy play itself out. Where does India find itself in the middle of all of this?
Well, I think there's a number of factors at play. I think geopolitics is one of the factors. I think COVID made an awful lot of buyers realize they shouldn't be over-dependent on any one source of supply or any one particular supplier, that they need to have contingency in their supply chain. And I think resilience is an important factor in supply chains. So that's why I use the word reglobalization. I think people are adjusting supply chains for a range of factors, and they're sourcing from multiple countries and multiple suppliers. And I think India has huge potential to be one of those suppliers going forward. We're seeing evidence of that already in that manufacturing plants are starting to be built in India. And credit to the government of India. They've created an environment that is stable politically on a domestic front, but they've also made substantive changes to the way the economy works. The introduction of GST, the digitization of payments, the digitization of identity, make it that much easier for a foreign company to come and establish a base here in India.
Okay, remember you can catch excerpts of the chat with Noel Quinn, the Group Chief Executive at HSBC, all day today only on CNBC TV18. Let's slip into a quick break on that note, but on the other side of the break, it's our special segment, It's the Economy. Lata will get chatting with Shyam Srinivasan of Federal Bank on the surging stocks in the banking space and merger speculation surrounding the bank as well. Stay tuned.
Bank stocks have been the best performers lately, with half a dozen banking stocks hitting all-time highs yesterday. Banks are also seeing a bunch of upgrades to their earnings due to higher than estimated margins, lower than feared credit costs, higher loan growth expectations, etc. We heard from a public sector banker. Joining us now is a prominent private sector banker. This bank, besides seeing earnings upgrades, is also in the grip of some merger speculation. I have with me Shyam Srinivasan, the CEO and Managing Director of Federal Bank. Shyam, thank you very much indeed for finding time for us on a day after Onam. Happy Onam to you. Well, I just wanted to ask you, your stock would have been at all-time highs, except that it stole the thunder on Monday with this buzz of, a probable possible merger with Kotak Bank. Can you tell us on the record what is the status? Are you talking to Kotak or to anyone on merger issues?
No, I think an internal communication I made had caught the public attention, so I don't think there's any speculation of any nature. Besides making an exchange clarification, I made it very clear that A, there is no such conversation, nor is there a requirement for it. We've been for long building something that's special. I've always mentioned we are trying to build the most admired bank, and that's not going away. And all our intention is something to build to last. So there is no question of such a conversation. I don't know where these things crop up from, but I think that's buried and moved on.
Oh, okay. No, I'll tell you where it may have cropped on, because there was conversation in the market. There is a question of after Shyam, who? You've been at the helm of what, 12 years? And there is a feeling that, it's so large. Is there a second rung? And therefore, will even RBI be happy if it is merged? Any thoughts?
No, I think that's a very presumptuous statement to make that, after Shyam, what be that deep. First of all, I'm not going away.
No. You have till 24 anyways. I'm not saying you're going away, but what I'm saying is that could have triggered this thinking.
No, I think we bat very deep. I think I've said that often. The board has a very good succession plan. And, should the need arise, there will be very many better people in the market who will be up for taking this job. We are a good bank, doing very well. So I think that's, honestly, that's in the realm of speculation, and we should just not give it too much attention. I don't want to take away the focus of the bank on doing something special, which we are doing, as you probably be observing. And I don't think that should be anything that should distract us from that.
No, there's no denying that you're doing extremely well. Always a bank noted for its liability franchise. But let me just read out the latest report. Morgan Stanley's base case is a stock price of 147 for Federal, and the bull case is 212 rupees. You tell us on the ground, are things looking very good for the banks? Is it the best in 10 years or the best in 15 years that you have seen?
If you look at the industry credit data, I'm sure all of us are following, some reports suggest that you haven't seen credit growth of this magnitude in the last 7-8 years. And I have been around for a long time, never seen growth of this nature in the first, say, 100-120 days of a financial year. And the good news is it's broad-based. The good news is I think corporates are coming back to banks, SMEs back. But I think really the biggest happiest and most positive development has been how SMEs have come back. And I see that as a big sign of sort of economic progress and, importantly, an opportunity for us to grow. The challenge will remain how do banks garner deposits and continue to be able to fund growth. And banks like us, which have had a traditionally strong liability franchise, are better positioned and very well capitalized, have a good liability franchise and capitalized well. I do believe this is a good opportunity, and I haven't, at least in the last 3-4 years, we haven't had a situation like this, which has been very positive for and sort of abetting good growth.
Oh, that's a very, very optimistic, bullish statement you're making. Standard brokerage report is speaking about higher than expected NIMs because cost of funds have not gone up so much. I mean, basically with the Reserve Bank rise in rates, deposit rates have not gone up as much as lending rates have because many of them are externally benchmarked. Is that a good guess that, for instance, for Federal Bank, margins will be higher than what it was in the previous couple of quarters and loan growth will be better than what it was for the previous 2 quarters?
Let me pass that into parts. Loan growth will be better as it has been in our first quarter, and I see no reason why that should stack off in second or even following quarters. The margin is a function of many things, as you probably know. One is the cost of funds is only one element. How is the slippages and therefore the reversal in interest income is another. And the shape or the mix of business, right? If you're doing very good credit quality businesses today, they can command pricing. So I think the blend of all these things play into the margin. But that said, near-term margins will widen only because the credit gets repriced faster than the liabilities when the rates are going up. So you may see an uptick in a quarter or two, but on a sustained basis, that will sort of moderate. I don't believe that will, the jaw will open up so much that the margin will continuously expand. But I think the business mix, the credit quality, and your cost of liabilities will be defining how margins are. And we've been guiding for something between 325 or so, 325, 327 for the full year. And I'm sure that we should be able to deliver on that.
Okay. With that picture of you giving a loan to a robotics company through the robot went viral. I mean, more specifically, what is this? I mean, how do you do due diligence for a company like this? And more generally, what is firing for you in terms of the SME? Which category? Or basically, which is the asset franchise that's working for you?
Like I mentioned, I'll come to the specific robo company, which I was pleasantly surprised to see such a wide followership for that post. But in general, the credit expansion has been very sort of broad-based. We've seen corporates come back to the banking system. As you know, most of last year or the previous year, they were, alternate sources of money were there. Now I think they've just definitively come back to the banking system. So that itself is, there's a fair amount of demand coming from that. As a consequence of that, as capacity expansion is probably now something that's top of mind for some of the good corporates, you're seeing as that investment comes in, corporate demand is going up and the downstream effect of their supply chain also requiring more credit. So I think expansion and credit on that count has been quite marked. Retail, thankfully, has never slacked off. It's been quite consistent, except for retail unsecured. At least for us, we were not very big on retail unsecured. I'm beginning to see that with the risk level sort of moderating better, that is also picking up. So that's how I see credit on a broad-based basis. Specific to this company and specific to our SME franchise, this company is in the manufacture of robo. They have been at it for quite some time. It's been a sort of a relationship where they were a vendor to us in some parts. Recently, we found that both they have demand and an opportunity, and so we decided to be a lender to them. And the sort of interesting part is they received the sanction letter by the robo coming to collect it. So I think that sort of part public imagination, which is nice.
Oh, absolutely caught my eye. Yeah, go ahead.
So the segments like this, which are so-called new age, which are so-called looking to expand and seize these digital enhancements that are happening, are actually coming to be quite interesting, because these are not large tickets. These are 1-2 crores in most of the tier 2 towns. A lot of such things is happening, whether it's Kerala, Tamil Nadu, parts of Maharashtra. We're seeing a lot of such, I would say, 1 to 5 crore kind of credit demand picking up quite interestingly.
Okay.
And with digital reach and with a sort of ability to take credit appetite there, this may be an interesting segment to grow in the coming period.
That's always an interesting segment, and the nation itself will be very grateful. The governments will be grateful if that segment can be given loans. But do you all have more AI or ML or data in place now to believe that this segment will deliver and that you will not be having to suffer slippages?
I think this segment is bound to grow, because if you look at as you probably know, we're working with a lot of innovation and a lot of hubs around, even the Reserve Bank's innovation hub we're working with. These are all projects that are targeted at catching these relatively new to business and using digital capabilities and how they can monetize data. And I see that as coming to be a big opportunity. This company, which is specific to what we are talking of, their robots serve a fair number of industries, and it's got enough scalability and adaptability. With more and more people looking at these as opportunities to either automate, digitize, and or enhance their manual capabilities, these are becoming quite scalable.
Fair enough. Okay. All right. Let me, like Oliver Twist, ask for more. Shyam, y'all have always had an excellent liability franchise, but y'all don't get beyond that ROA of 1%. You know, tell us if you can achieve that, because you say the going is good.
No, I think that conversation would have been true a year back, Lata. If you see our numbers in the last, let's say, 3 quarters, we've crossed well past 1, and our guidance for this year is 1.15, and the following year 1.25 as exit rates. And I think we are on course for that.
The market guns for 2, isn't it? Because that's the mark of the gold standard.
Yeah, I mean, barring 1 or 2 banks, show me banks that have had
Yes,
2 on sustained.
I agree. But then everybody doesn't have a liability franchise like you.
Yeah, so I think, I mean, I don't like to sort of trivialize the question, but I think if you look at consistency and if you look at a Dravid kind of play, then you have to be consistent across time, not just have flat.
Yes.
I proudly say that we are in that space. Yes, we may not have been the best bank on ROA for a few years, but over a 10-year period, I think we come out better than many others.
Okay, fair enough. I mean, just as a goal, it's a great one to have, considering that you'll have built a very sticky liability franchise. Okay, let me end where I began. You know, I began with this merger question. If you all have to buy something, you know, an NBFC or a fintech or even a bank, what would the considerations be? Would it be geographical? Would it be technology? How would you think of inorganic expansions?
This is absolutely blue sky, so I'm going to think along with you. See, if you look at our franchise now, what we would like certainly is businesses that are slightly higher margin, right? I mean, we've built a very sticky liability franchise. Credit quality has been quite exemplar. Our margins are not the top of the line. So certainly businesses that are margin accretive would be a good opportunity. For long, we've been talking of growing microfinance, but you know, it's sort of been a in and out game. Every time we are interested in something happens in the market and it sort of goes away.
That's right.
So if there is a scalable microfinance opportunity, absolutely yes, we would be interested. NBFCs and others have to make sense from a point of view of whether they are margin accretive. It's businesses that are doing the same thing that we're doing. I don't know if that makes a lot of sense, unless it gives us geographical expansion into territories that we are sort of not materially present.
Okay.
So, short answer, we will look for opportunities that may be margin accretive and opportunities that are very interesting. But I must add quickly, lest it becomes another speculation, this is absolutely...
Okay. No, I didn't intend it as a speculation. Thank you very much, Shyam, for joining us with all these details. What I am taking away from this conversation is that times are very good for the banking sector and that a veteran banker believes that he has not seen such excellent times for bankers in some time now. With that, we wind up on this conversation. Up next is Short Pastors.